Good day, everyone. This is Patrick from EasyFX Code Trading System, and it is Saturday, the 21st of January, 2023. And this is the weekly technical analysis for spot gold and dollar yen for the fourth week of January. And let's begin with spot gold, where it's still making newer and newer highs for this new year, and already hitting a high now of 1920, just over 1920. On the Wednesday, it did 1935 over. Yeah, over 1935, hit a high of 1937.50 for the week. So if you take a look at the week, it's a small range relatively, with support from the 1900, and then eventually climbing back up to hit that high and close at the around the 162 pip extension at the 1926 level. Let's go back to the daily again. So it started off the week by testing the 162, but then pull back, forming a rising tree methods. This 5 candlesticks here is a rising tree methods, and pushed up on the Thursday before settling on the Friday. So only one day for the week, for last week, where it managed to eventually close back above the 162 and opening up opportunity to reach the 1950 level, which is at the key resistance now, which is our key resistance. So this area, let's remove this. We don't need this now. And the intermediate support at the 138 pip extension. Let's move this one here as also as an interim support at the 1900 round figure. Major support still at this trend line that we broke out from, and then we tested before bouncing back up. So this zone down here is going to be at the, will form a key support. That's around the 1840 area. All right, so this coming week, we'll see if it's going to continue higher to test the 1950. And as it slowly creeps up, and we'll see how long it's going to take, but it's likely going to try to hit 2000 at some point. It's going to be in alignment with the 200 pip extension. Close to the 200 pip, it's just above the 200 pip. Okay. And this week, the only key news is from the US at on Friday with the PC price index, which will give some indication to the Fed for their February 1st meeting. See whether inflation is coming down, continue to come down. This is for the personal consumption. All right, so let's see what happens this week, and along with the US dollar index as well. looks like it's going to settle around the 162 fib extension, 1925 zone. So let's see what happened with the US dollar index and whether it's fairly inversely correlated with gold this time, which it is with the euro. If we check my other videos. All right, let's move over. And here's the US dollar index, the DXY. And you can see it's also trading in a narrow range for last week, apart from the long wick below. Otherwise, it's also in just wider than a 100 pip range. And that was Wednesday, where the US dollar yen caused some volatility due to the Bank of Japan's policy, but there was no change. The policy announcement, there was no change since the last one where they made some tweaks in their yield range. That was in December, but this time everyone was expecting some further changes, but they did not make any, and that created some volatility here with some initial move down. This was the initial move down, and then went all the way down to almost test the 101, just shy of the 101 before it managed to recover back to the 138 fib extension zone, and just oscillating around that area for the rest of the week. So all just waiting and pending further news for the Federal Reserve meeting on 1st of February. Go back to the daily time frame, and this week there's only some key news, but the key one will be the Friday US PC price index, which will give further indication of inflation reading. Interim support is still at the 101, with the major one right below that at the 100. And the interim resistance at the 103. Didn't quite get there this week. And operating well in the lower range below the 138 fib extension of this swing move down. If it really needs to break out above the 103 before it can try to make a serious recovery. And 105 will be the main trigger of the change into a more bullish mode. All right, so we'll see this week if there's any further breakthrough in this consolidation area for both euro and other major pairs, as well as the US dollar index. But for now, it's very, very tight and low volatility for the week. We'll see if that changes next week. All right, so let's move back to the other major pairs. Let's continue with the dollar yen, where there was a major increased volatility on Wednesday with the Bank of Japan's policy statement, where traders and analysts were expecting some changes similar to last month in December. However, they did not make any changes, so that still created some volatility on Wednesday, where it initially spiked up first before pulling back down. But for the week, If we take a look on the weekly time frame, it's had a bullish close and it did test the weekly 55 EMA for pulling back, and that's the Wednesday move where it did try to spike higher, but then eventually close just below the 130 round figure, but holding support at the 138 pip extension. That's at the 127.67 area. So this is still going to be a critical support level. We could move this to the next one at the 162, where that's also a previous swing low before. So that's a major support at 125.90 area. And that's could mark this as an interim support. Okay, and move this support resistance down to the 78.6 area, 78.6 retracement. And yes, although there's a major resistance there, it's also going to mark one more major resistance area developing in this cluster with the 50 pip retracement and the daily 200 with the daily 55 coming down. So that's a significant resistance zone. Okay. So let's zoom in on the 4-hour to see what happened on the Wednesday with the Bank of Japan's statement. So it did, since there was no change, there was initial reaction with the Japanese yen weakening and the dollar attempting to spike higher, but then got hit with the weekly 55 EMA before retracing all the way back down and retracing the whole move and back down to find support at the 138 pip extension, and eventually climbing back up again to test that 100 pip swing low. So eventually through the last couple of days of the week, it did climb back up, but then pull back again to close slightly lower and forming that upper wick for the weekly candle, but still a bullish close. So there's still some hope that it could continue to recover and back up to the 78.6 at least, back up to test the weekly 55 EMA. Okay. So let's see how the US dollar price action goes for this coming week. And do check out my other videos on the other major pairs. Have a safe week and a good trading week, and cheers for now.